Elon Musk has virtually sold most of the 10% stake in Tesla that he intended to sell, and there's an assurance that the stocks will explode up to $3,000. Until now, Tesla's stocks have been progressing sort of slowly, but following the effects of Musk selling his stock, things look to change, and 2022 could be the year the company's stocks explode. Experts predict the company's shares could rise to $3,000, and in our video today, we will take a look at how this would happen. We will be focusing on the prediction from Cathie Woods and ARK Invest. So will Tesla's stock explode to $3,000? Will it be beneficial to those looking to invest? Keep watching to find out. At the end of 2021, Tesla's stocks were sitting at $1,086.19. The year ended on a sort of quiet note, as there wasn't any significant action affecting the overall market. As you might know, Elon Musk sold some shares on the 28th of December 2021 for $1.91 and sold about 923,000 shares, and more than 10,000 shares at $1,113. So he essentially finished selling his shares, which is rather significant for Tesla stock. Next, Tesla's earnings report is rescheduled to release on the 26th of January 2022. We have to watch out for specific numbers as we draw closer to the end of January. The most important one currently is the company's delivery numbers. The expected figure for Tesla delivery figures is around 276,900 automobiles. There are 261,400 Model 3 and Model Y automobiles and 15,500 Model S and Model X vehicles. There are a lot of various analysts and experts predicting that this figure may be much higher. The second significant variable we'll be discussing as we enter into 2022 is what Elon Musk mentioned about complete self-driving cars being adopted next year. So 2022 will be a massive year for Tesla stock. Now, why are we sure that Tesla stock will explode to $3,000? Well, it's because of ARK Invest. So what exactly is ARK Invest? According to its website, ARK's thematic investment strategies span market capitalizations, industries, and countries, focusing on public companies that they believe will be disruptive innovation leaders, facilitators, and beneficiaries. ARK's concepts are intended to deliver long-term growth while unrelated to traditional investing strategies. Cathie Woods is the CEO of ARK Invest. The corporation made a significant investment in Tesla some time ago, and it is now reaping the benefits after recently selling part of its shares. ARK Invest is well known, and they appear to know what they're doing. According to its estimates, the business created a 5-year prognosis for Tesla. However, you don't need a lot of money to become a millionaire by investing in Tesla shares. Last year, ARK predicted that Tesla's share price would reach $7,000 per share in 2024, or $1,400 after adjusting for the company's 5-for-1 stock split. According to their most recent analysis, it might reach $3,000 by 2025. ARK utilized a Monte Carlo model with 34 inputs to generate this projection, with the high and low forecasts comprising 40,000 potential iterations. In addition, ARK has upgraded its assumptions for Tesla's capital efficiency from its 2024 study. Woods and ARK Invest previously anticipated that Tesla would pay between $11,000 and $16,000 per extra unit of capacity in 2024, but Tesla spent $1.33 billion on capital expenditures in 2019 and produced 509,737 vehicles, an increase of 144,505 cars over the previous year, implying that their capital expenditure per extra vehicle made was around $9,200. Tesla spent $316 billion on its capital expenditure in 2020, implying a capital efficiency of $10,330 in 2021, assuming a 60% increase in vehicle production. It should be noted that this calculation likely overstates the capital necessary for an incremental car, because some capital spending is for long-term initiatives such as autonomous data centers and Tesla's vertically integrated cell plant. During its Battery Day event, Tesla said its revised cell chemistry and manufacturing method would lower investment costs by 75% over time. To give Tesla credit for what looks to be greater capital efficiency, ARK Invest reduced gross capital expenditure per car in its most recent model. Based on the updated predictions and the extra year of growth added to their model, it is expected that Tesla's unit sales in 2025 would be between 5 and 10 million vehicles. ARK believes Tesla might obtain better than average insurance profits because of the comprehensive driving data collected from customer vehicles. Tesla launched its insurance offering in August 2019 in collaboration with underwriters and is now exclusively accessible in California. ARK expects Tesla to expand its insurance business to new states in the coming years, financing its insurance policies. In addition, Tesla should leverage real-time data to sell insurance in its vehicles, price it dramatically, cut customer acquisition costs, and improve profits because its cars have higher than average safety profiles. In our worst-case scenario, Tesla's insurance sales may reach $23 billion per year if it sells 40% of its vehicles with its insurance package by 2025. In our bull case, ARK expects Tesla's insurance income to be folded into a platform charge when robotaxis ramps up. In 2025, insurance raises our price target by about $60. In ARK's previous value estimate, we thought Tesla had a 30% probability of achieving completely autonomous driving in 5 years, ending in 2024. ARK now believes that the likelihood will be 50% by 2025. Since ARK's last projection, neural networks have solved several complicated problems previously thought unsolvable, boosting the probability that robotaxis would be practical. According to ARK, Tesla's vehicle fleet provides 30 to 40 million miles of data each day, up from 20 million per day last year. If successful, Tesla could swiftly increase its robotaxi service, directing the extra funds to manufacturing capacity servicing its autonomous network. Tesla could produce an additional $160 billion in EBITDA in 2025 if 60% of its autopilot-equipped vehicles served as robotaxis. According to our bull thesis, ride-hailing would account for the bulk of Tesla's enterprise value in 2025. However, it's worth noting that the autonomous driving dramatically raises the dispersion of the predicted price objectives. Production limits limit Tesla to less than 4 million units produced each year in many low-end situations analyzed by ARK Invest. At the same time, technological and logistical hurdles hinder the introduction of both human-driven and autonomous ride-hailing networks, as indicated in gray. When manufacturing is not restricted, a human-driven ride-hailing network raises the estimated price goal range. As seen in green, less than 20% of Tesla vehicles sold into ride-hailing in 2025, and in navy, 20 to 70% of Tesla vehicles sold into ride-hail in 2025. Finally, the high-end pricing predictions in purple include the expectation that Tesla will introduce a robotaxi service. Can Tesla truly double its share price to $3,000 by 2025 to become the most valuable, highest-earning company on the planet, led by the world's richest person? And not just achieve all those superlatives, but do it at a rate that leaves Amazon, Apple, and Microsoft in the dust. That is, in fact, the latest projection from ARK Invest, the firm led by longtime Tesla devotee Cathie Wood, and whose funds own over $3.2 billion in the electric vehicle stock. Investors were encouraged by the forecast, and the company's stock rose 6.2% to $698 or $41 billion at lunchtime in January. ARK anticipates that Tesla's value will more than quadruple over the next 4 years and 9 months, and if that happens, its market cap will raise to $3 trillion, assuming the number of shares outstanding remains roughly the same as it is now. It's a significant leap of faith, says Jack Shischelsky, a prominent accounting specialist in the country. Shischelsky observes that ARK is not presenting its argument based on the fundamentals that are typically used to value stocks. They aren't thinking about Tesla in the classic sense. Shischelsky does not criticize ARK's techniques. When you have a firm with such an unclear future, you have to approach it the way ARK did, he explains. You have to make educated predictions about the most likely inputs and set boundaries around those guesses. However, putting a bunch of informed estimates in a mathematical model doesn't always provide a substantially better result than conventional analysis, such as how quickly the car industry will develop and how much of that growth Tesla is likely to take. One thing I don't see in this research is the competitive landscape, says Shischelsky. Shischelsky makes an excellent argument. First, a slew of new entrants is challenging Tesla's current dominance. Second, Volkswagen plans to invest $85 billion in EV development by 2025, while Ford and General Motors invested a combined $30 billion on electrification. BMW is aiming for up to a quarter of its sales in the rapidly rising sector. By the same time, ARK estimates Tesla to achieve $3,000 and Honda to make 2/3 of its fleet electric by 2030. ARK does not provide a specific forecast for Tesla's unit sales during that year. However, based on its bull case of 10 million, we may estimate the figure is closer to 9 million. It sold 500,000 vehicles last year. As a result, new Teslas on the road would need to account for 8.5 million of the estimated 10 million unit growth globally by 2025. So will GM, Toyota, and Volkswagen sit back and watch while Tesla consumes 85% of the sales gain over the next half decade? What do you think of ARK Invest's projections for Tesla? Comment down below.